You didn't blow up because you don't know how to trade. You blew up because you tried to make the market pay you back. It's 10:07 a.m. and you're staring at a 5-minute chart that just slapped you twice in a row. 2 clean setups, 2 clean stops, 2 clean losses. Nothing insane. Annoying. And then your body does that thing it always does. Jaw tight, chest hot, fingers fast. You're not thinking, what's my edge? You're thinking, I'm not ending this day red. So you size up. You widen the stop just a bit. You take a mediocre entry because you can't sit there and feel that loss. And within 10 minutes, you're not down 2 small losses. You're down a week. That is the revenge trade loop. And if you've been trading for more than a few months, you've felt it. The moment when trading stops being a skill and turns into a courtroom. You versus the chart. You're trying to win an argument. In this video, I'm going to show you exactly why revenge trading keeps you stuck at zero, why it feels impossible to stop once it starts, and the 4-part reset that breaks the loop fast, without needing more discipline, and without pretending you'll never feel angry again. And stay with me, because the most dangerous part of revenge trading isn't the first impulsive trade. It's the almost recovered phase, where the trap tightens. Trading is risky. Most traders lose money. This is education, not financial advice, and past patterns don't predict future results. The goal here is survival and process. Now let's name the pattern you can't see while it's happening. Revenge trading isn't random, it's a sequence. It starts with a normal loss, and then you interpret that loss as something personal. Not I executed my plan and took a valid stop. But I got played. That one sentence changes everything, because the instant you feel played, you stop trading the market and start trading your emotional state. And your brain is built for that. A loss triggers a threat response. Stress chemicals rise, your attention narrows. You start scanning for the fastest path back to safety, which in trading looks like get the money back. But the market doesn't care about your safety. The market only offers probability. So what do? You try to force certainty. You take trades that don't meet your rules because waiting feels like weakness. You increase size because small size can't fix the feeling fast enough. But you hold losers longer because taking the loss would confirm the story that you're wrong. You take profits early because you can't risk another reversal. So now you're doing the exact opposite of what your edge needs. And here's the cruel part. Sometimes it works. Sometimes your revenge trade wins. And that win trains the behavior like a slot machine. Your brain learns, when I can trade it away. So the next time you feel it, you do it faster, bigger, less controlled. That's why this loop keeps people at zero for years. Not because they never win, because the wins reinforce the worst habit. There's a line I want you to remember. Bad traders focus on themselves. Good traders focus on the meaning of what's happening. Revenge trading is self-focus under pressure. Your chart becomes a mirror. Every candle is a verdict on your worth. And once trading becomes self-worth management, you will always overtrade because you're not trying to make good decisions, you're trying to feel okay. That's the hidden engine. Now let's talk cost, because the cost is not you lost money. The real cost is that it destroys your ability to build an edge. Here's what the revenge loop does to your account over time. It deletes your best work. You can have a solid week, patient entries, clean exits, controlled risk, and one revenge spiral can erase it in an hour. That's not just a financial hit, that's a psychological hit. Because now you start believing a new story. I can't hold on to gains. And that story creates the next loop. You trade scared, you cut winners early, you hesitate on good setups, you miss the trades that would actually make your month, and then you feel behind, and then you revenge. It becomes a closed circuit, and this is why you end up stuck at zero. You're not losing because your strategy is terrible. You're losing because your worst behavior clusters on your most emotional days. One day of bad process contaminates 10 days of good process. And there's another cost that people ignore. Revenge trading destroys your feedback. Because when you're tilted, every trade is contaminated. You can't tell what worked because of your edge and what worked because of luck. You can't tell what failed because of your setup and what failed because you broke rules. So, you can't learn. And if you can't learn, you can't improve. You just repeat. Now here's where it gets worse. And this is the almost recovered phase. You take 3 revenge trades. You're down big. Then you finally catch a move. You make back 60% of the damage. And suddenly your brain says, see, we're back. One more. That's the moment most accounts get wrecked. Because now you're emotionally attached to finishing the comeback. You are no longer trading for profit. You are trading for closure. And the market doesn't give closure, it gives variance. So how do you actually break this? Not with motivational quotes, not with just be disciplined. You break it with a process that interrupts the loop at the exact points it forms. I'm going to give you a 4-part framework. Simple, mechanical, repeatable. I learned this from watching one trader who used to blow up like clockwork, until he built a system that made revenge trading almost impossible. His name is Marcus. 2 years ago, he was the guy who could be up all month and then donate it all back in a single afternoon because he couldn't handle being wrong twice in a row. He wasn't stupid, he wasn't lazy. He was emotional in the most human way. He needed the market to respect him. Then he rebuilt his trading. Like a pilot rebuilds a cockpit. Fewer choices, clearer alarms, forced checklists. Here's the framework. Rule 1. Separate a losing trade from a losing state. A losing trade is data. A losing state is a condition. You're not allowed to trade in a losing state, so you need a state detector. Marcus used 3 signals. You can use the same. Signal A, speed. If you place the next trade faster than you placed the last one, you're not in analysis, you're in reaction. Signal B, size. If you increase size after a loss without a written, pre-planned rule, you're not sizing, you're swinging. Signal C, language. If the words in your head sound like "get it back," this is stupid. I'm not ending red. You are no longer trading your edge. You are trading your identity. If you trigger any 2 signals, you are officially in a losing state. And in a losing state, you don't try harder. You stop, which leads to Rule 2. Rule 2, the 2 trade circuit breaker. Most revenge spirals don't start at trade 10, they start at trade 3. So Marcus had a rule. After 2 consecutive losses, he was done trading that instrument for a fixed period. Not done for the day forever, done for a reset block. For him, it was 30 minutes. For you, it can be 20, or 1 full hour. But it must be predetermined, because if you decide the reset while tilted, you'll negotiate with yourself. I'll just take 1 more. No, 2 losses triggers the circuit breaker. Period. This 1 rule alone saves accounts because it kills the chase the tape phase. And here's the part people miss. 2 losses in a row doesn't mean you're a bad trader. It can mean the market regime shifted. Your edge plays out over a series, not a moment. Variance clusters. If you can't emotionally tolerate clusters, you will always sabotage. So the breaker protects you from normal probability. Rule 3. Switch from trading to evidence. During the reset block, you do not scroll charts searching for a comeback. You run a 3-question audit. Question 1. Did I follow my entry rules? Yes or no, not mostly. Yes or no. Question 2. Were those losses within my planned risk? If not, it wasn't a trading loss. It was a process violation. Question 3. Is the market in the condition my strategy needs? This is huge. If you trade breakouts, is volume expanding or is it dead and choppy? If you trade mean reversion, is it ranging or is it trending hard? If you trade momentum, are you seeing clean follow-through or instant snapbacks? You don't need a PhD, you just need honesty. Is the market giving my setup oxygen right now? That, because revenge trading often happens when you keep applying yesterday's strategy to today's market. And the market changes faster than your ego. So the audit forces a different focus. Not, how do I win back, but what is the market doing? Rule 4. Pre-commit your re-entry size. This is where most people fail. They stop, they cool down, and they come back with the same emotional desire. So Marcus had a re-entry rule. After a tilt trigger, his next trade must be half size for the next 3 trades. No exceptions. Why? Because reduced size lowers emotional heat, which restores decision quality. And decision quality is the real edge. If you can trade perfectly at half size, you earn the right to scale back up. If you can't trade perfectly at half size, scaling up is just accelerating the damage. Now let me add one more piece that turns this from good advice into a real system. You need an end condition for the day, not a P&L number, a process number. Because if your goal is finish green, you will always chase. Instead, your goal is finish clean. Marcus had 3 end conditions. If he hit anyone, the day was over. 3 rule violations, not 3 losses. 3 violations. That means you're not respecting your own plan. 2 tilt triggers. If he hit the losing state twice in one day, he was done. Because that's a sign the day is psychologically compromised. 1 oversized loss. If he took a loss larger than planned, he didn't try to fix it. He ended the session and reviewed. Because trying to repair an unplanned hit is exactly how revenge trading starts. This is what separates pros from gamblers. Pros don't try to win every day. Pros try to execute every day. Now, what does it look like when this works? Let's go back to that moment. 10:07 a.m. 2 losses. Heat rising. Old, you feels the urge to punish the chart. New, you recognizes the losing state. You see the speed, the size temptation, the language in your head. You trigger the circuit breaker. You step away, not because you're weak, but because you respect probability. During the reset block, you run the audit. You realize the market is choppy, follow through is garbage, your breakout setup is starving. So the best trade is no trade. And here's the part nobody talks about. When you do that, when you don't revenge, your confidence actually grows. Not because you made money, because you kept control. That becomes your new identity. I'm a trader who doesn't chase. And identity is everything, because the revenge loop is powered by a fragile identity that needs the market to confirm it. A stronger identity comes from process. I can be wrong and still act like a professional. You don't need to be emotionless. You need to be structured. You will still feel the heat, but the heat won't get to drive. And once revenge trading stops driving, something strange happens. Your stats improve without you changing your strategy, because your edge was always there, buried under emotional clustering. 1 clean stop instead of 2. 1 reset instead of a spiral. 1 day ended early instead of 1 week erased. That's how you stop being stuck at 0. Not with 1 heroic win, with a system that prevents 1 emotional hour from deleting a month of good work. So here's your challenge. On your next trading day, you're not trying to make money, you're trying to catch the loop. Name it early, hit the breaker, run the audit, re-enter small, or don't re-enter at all. And if you want the fastest proof that this works, track 1 number for the next 10 sessions. How many days did I lose because of revenge, not because of my strategy? When that number drops, your account changes. Because you finally stop paying the revenge tax, and the market can't keep you at 0 anymore. 2-Brett Steenbarger, -trading, _psychology, _2_0, _ from _ best Jack Schwager